Hey everyone, welcome back to Corporate Decoder, the place where we crack open corporate secrets and spill the tea on what really matters. Today, we're diving into California Water Service Group's latest filing, and let's just say they've been busy making some big financial moves. Before we dive in, make sure you're subscribed if you like getting the plain truth about company financials. And don't forget to join our Discord community. The link is in the description below. It is where we really break down these filings and share insights. So, what exactly is this Form 8K all about? Think of it as a company-S way of telling the public about important events that just happened and weren't already tucked away in their regular financial reports. It is like a news alert for investors about significant company happenings. The main story here is about California Water Service Group, or Group as they call themselves, and their subsidiary Cal Water. On the 1st of October 2025, they completed the sale and issuance of a whole lot of notes and bonds. First up, Group sold $70 million worth of what they call series of notes. These are basically loans they retaking out with an interest rate of 4.87%, and they need to be paid back by October of 2032. These are senior unsecured notes, which means they rank high in priority if something were to go wrong, but they aren't backed by any specific company assets. Then, they also sold $100 million in Series B notes. These have a slightly higher interest rate of 5.22% and are due in October of 2035. Together, these are the notes. On top of that, their subsidiary Cal Water issued $200 million in what they call first mortgage bonds. These have a 5.64% interest rate and are due way out in October of 2055. The first mortgage part is important here because it means these bonds are actually backed by specific company properties, giving bondholders extra security. So, in total, the group and its subsidiary have just taken on a massive $370 million in new debt. That is a huge sum of money. How do they plan to pay this back? Well, interest on the notes will be paid twice a year in April and October, starting in April of 2026. The bonds have a similar payment schedule for interest, also annually starting in April 2026. Now, let's talk about how the market views these new debts. The Series A and B notes got an A rating from SPIP Global, which is pretty good. It means SPIP believes the company has a strong ability to repay its debts. The first mortgage bonds received an even better rating of AA. This indicates a very strong capacity to meet financial commitments, and because they are secured by property, they're considered even safer. So, what is all this money for? The company says they plan to use the cash from selling these notes to pay off some of their existing debts and for general business needs. Refinancing debt often means they're trying to get better interest rates or extend payment deadlines, which can be a smart move if managed well. And Cal Water plans to do something similar with the money from the bonds, also using it to pay off old debts and for general company stuff. The mention of the California Public Utilities Code Section 817 suggests these actions are aligned with regulatory requirements for utility companies in California. An interesting detail is that these notes and bonds were not registered under the Securities Act of 1933. This typically means they were sold to a select group of investors, likely institutional buyers, and not offered to the general public. This is common for large debt issuances. Looking at their stock, their common shares are traded on the New York Stock Exchange under the ticker symbol CWT. It is trading at a par value of 1 cent, which is more of a technical accounting value than what the stock is actually worth on the market. And as usual with these filings, they list the supporting documents. One of the key exhibits here is the note purchase agreement and the 65th supplemental indenture for the bonds. These are the actual contracts outlining the terms of these debts. Now, looking at these numbers and this debt issuance, California Water Service Group is clearly in a phase of actively managing its finances. Raising $370 million is a significant undertaking. On one hand, getting good ratings from S&P like AAA is a positive sign. It suggests ability and a good ability to manage this debt. Using the funds to refinance existing debt can also be a strategic move, potentially lowering interest costs or improving cash flow. However, taking on such a large amount of new debt, even with good ratings, always comes with inherent risks. The company's future financial health will depend on its ability to generate enough revenue and profit to cover these new interest payments and eventually pay back the principal. For a utility company like Cal Water, their revenue streams are generally stable due to the essential nature of their services, but they are also subject to regulatory approvals for rate increases. A key question for investors will be how this new debt impacts their profitability and their ability to invest in future infrastructure. While they mention general corporate purposes, a significant portion of a water utility's capital expenditure typically goes into maintaining and upgrading their systems to ensure safe and reliable service and to meet growing demand or environmental standards. Overall, this filing shows California Water Service Group is making strategic financial plays. The decision to raise substantial capital through debt indicates confidence in their long-term prospects and a plan to optimize their financial structure. The strong S&P ratings provide some reassurance, but like with any significant debt issuance, close monitoring of their financial performance in the coming years will be crucial to see how effectively they manage these new obligations. Alright, that is our breakdown of California Water Service Group's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think taking on this much debt is a smart move? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.